Hello, dear students. Myself, Professor Deepa Tangankar, dealing with Financial Accounting 2 for second semester students of GCC. In the previous class, we had just begun with the first unit, that was in terms of consignment, and we have studied the meaning of consignment. Okay, so we had just begun with the first unit and then we studied the meaning of consignment, and this is how the consignment actually works, where you have two parties, the consigner and the consignee. The consigner gives the right to the consignee to sell the goods, for which he'll be getting some amount of commission. So let's look into the next part of the unit, wherein we are going to study the features of consignment. Now here there are n number of features of consignment, but I have taken a few of the features. So the first one is you have two parties involved. Now who are the two parties involved here? The two parties involved are the consigner and the consignee. Okay, you have two parties involved. One is the consigner and next is the consignee. Next, transfer of possession. Now here possession, that is here you're just getting, the consignee is just getting the right to sell the goods. Okay, the ownership remains with the owner itself, that is the ownership remains with the consigner only. Okay, the consignee, that is the agent, is only getting the right to sell the goods which belong to the owner, which belongs to the consigner. He is just getting the right to sell the goods. He does not have the ownership of those goods. Ownership remains with the consigner only. Okay, he is only, that is the consignee is only getting the right to sell the goods. Okay, so the possession of goods is transferred from the consigner to the consignee, that is only the right of selling the goods is being transferred from consigner to the consignee, whereas the ownership of the goods remains with the owner, remains with the consignee only. Okay, next, the next feature is agreement. Now there is an agreement between the owner and the agent, between the consigner and the consignee. This I had told you in the previous class also, that is consignment. You are signing an agreement between the consigner and the consignee. Okay, the owner is signing an agreement with the consignee, with the agent, which consists of the terms and conditions which are required while having the consignment been done, while making the agreement of selling the goods, transferring the right to sell the goods from the consigner to the consignee. Okay, so the details will be given by the consigner, and if the consignee, that is the agent, agrees with the terms and conditions put by the consigner, then in that case he will be signing the agreement and they enter into a contract which is known as consignment. Okay, so it's a pre-agreement. It is before you enter into consignment, they have an agreement between the two people, that is the consigner and the consignee, which consists of the terms and conditions which are required for having the business been done, that is having the consignment been done. Next, now no transfer of ownership. As I already told you in the previous slide, we had only the right being transferred, that is the consignee is just getting the right to sell the goods, but the ownership remains with the owner only, that is the consigner only. Okay, so here no transfer of ownership, that is the ownership of goods remains in the hands of the owner, the consigner, until the consignee sells it. The only possession of goods is transferred to the consignee. Okay, so here the ownership remains with the consigner. Okay, once the goods have been sold, the ownership gets transferred from the consigner to the customer, not the consignee. Okay, consignee is only acting as an agent to sell the goods. Okay, he is only an agent who is selling the goods which belong to the consigner, okay, to the owner. Okay, once the goods are being sold, the ownership automatically gets transferred. That is, the owner who belongs the goods, once he sells the goods, the ownership transfers from the owner to the next owner who has to the customer. The customer becomes the next owner of those goods because he has purchased those goods. So the ownership is being transferred between the consignor and the customer, but the consignee is only getting the right to sell the goods. That's it. He is not getting any ownership of those goods. Ownership remains with the owner, that is the consignor. Okay. Now here, next one, reconciliation. Now reconciliation here is after the periodic that is after the year ending, once the financial year ends up, okay, or in the periodical intervals, the consignor and the consignee prepares their account, and then they try to adjust with the accounts what they have done. That is, they try to reconcile with their account. Okay. Now here, at the end of the year or periodical intervals, consignor sends pro forma invoice. Now what is this pro forma invoice here? Now pro forma invoices, the details being sent by the consignor to the consignee. Okay. Now see, who has the ownership of the goods? The ownership of the goods remains with the consignor. So since the consignor has purchased the goods or manufactured the goods, okay, so he knows what are the expenses being incurred for manufacturing or for purchasing those goods, right? So he gives the details as to the consignee regarding at what price the goods are to be sold. Okay. Then all the other details will be given by the consignor to the consignee. The instructions of selling the goods will be given by the consignor to the consignee. And suppose if the consignor says that a particular product has to be sold at a particular price, then the consignee has to sell it at the said amount only. He cannot change the amount. Okay, he cannot sell the product at lesser than what price has been quoted by the consignor. Okay, so all these details regarding at what price the products are to be sold, okay, all these details and all will be given in the pro forma invoice, okay, which has been sent by the consignor to the consignee while sending the goods. Okay. So as per the at the end of the financial period, at the end of the financial year or the periodical intervals, the consignor and the consignee prepare their accounts as per the details which are being sent by the consignor in the pro forma invoice. All right. Next, separate accounting. Now there's an independent accounting done by the done of consignment account in the books of consignor as well as the consignee. Both prepare consignment account and record the journal entries of goods through consignment account only. Okay. Now here, a separate account, that is both the consignor as well as the consignee prepare their accounts, and then they have the reconciliation of statements being done. Okay, they have the accounts being prepared later on. That is, individually accounts are being prepared. The consignor prepares his own consignment account, consignee prepares his own consignment account, and then they have the reconciliation being done of accounts. Okay, so these are some of the features of consignment. The first one is two parties, wherein you have the consignor and the consignee. Transfer of ownership it remains with the owner, that is the consignor. It's an agreement between the consignor and the consignee. And then you have the reconciliation of accounts being done, and a separate account has been prepared by the owner, that is the consignor, and the consignee. I hope you have understood the features of consignment. In this class, we'll be dealing only with the features of consignment. In the next class, we'll deal with the next aspect. Thank you.